I want to begin by what I mean when I talk about a gap. I use a very broad definition. For me, a gap is a space. It's a space between the current price and any support or resistance. For example, support or resistance, it can be the high, low, open, or close of any bar, the current bar or prior bars, any moving average, trend lines, trend channel lines, and a lot of times the support or resistance can be minor, yet it turns out that the gap is important. At the close of this bar, there's space between its high and a prior high, its high and the high of this lower high, and of the high of the prior bar. Those are all gaps. For example, this is a gap between this close and that high. The close of this bar is slightly above the high of this bar, a gap between this close and these highs as well. The low of this bar did not fall below the high of this bar, and therefore there's a gap here. Here's a moving average. It doesn't matter what moving average. There's a space between the low of this bar and the moving average. That is, therefore, a gap. There's a space between the low of this bar and that high, so that's a gap. There's a space between this low and that high, and therefore another gap. Look at the open of this bar and the close of the prior bar. This open is slightly above that close, and therefore there's a gap. Exhaustion gap, a big trend bar late in a bull trend. Usually the gap will close. The gap between the close of the big bull trend bar, which will end up as the exhaustion bar, and the high of the prior bar. And you can see we traded down below that high. It closed the gap, and that made this bar an exhaustion gap bar. Exhaustion gap does not mean trend reversal. It just means the bulls are exhausted, and they usually wait a few bars before buying again, which they did. This is a buy signal bar, and the bulls bought. This is a test of that buy signal bar high, and there's a gap between the low of this bar and the high of that bar. I want to talk a little bit about traditional gaps. For example, this is a daily chart. Does not matter what market, but it's a daily chart. You can see that the low of this big bull trend bar did not fall above the high of the prior bar. That is a traditional gap between the low of a bar and the high of the prior bar. That's a gap up. A gap down is a space between the low of a bar and the high of a bar right here. A gap up is a sign of strong bulls. Here's a gap down, and it's a sign of strong bears. The market actually opened down here, rallied strongly. It was unable to get back above yesterday's low, and then sold off to a new low later in the day. And this is the gap down. On daily charts, gaps are common. These green boxes are gaps up, and then the red boxes are gaps down. They usually do not have much significance. They're less common on weekly charts and extremely uncommon on monthly charts, except very thinly traded markets. And they're also less common on Forex charts, although you sometimes